Hey, back out on the deck today in some amazing weather, a little hot and sticky, but bearable. Figure there's a nice little view of some blue and green in the background. Somebody else's house, our citronella candle, the deck flowers that Deb planted so nicely. Just seemed a great day to do a Facebook Live from outside today. Because as you all know, I am getting even more and more passionate about getting 10,000 entrepreneurs to say finance is fun and really mean it within the next year. And I keep getting ideas about that all day, morning, noon, night. Anything I look at gives me ideas about how and why entrepreneurs should say that finance is fun. Because a lot of people who might listen to this might say, I don't need for finance to be fun in my life. And truthfully, for a lot of people, that's probably true. But if we're business owners, and serious business owners, if we're doing it for something other than just a hobby or ego or whatever it might be, if we really want to have a business, which by my definition, whether it's profit or nonprofit, because nonprofits need to be businesses as well, the idea is that you put cash into something. You create value by spending that cash, and then you put that value out in the world. And the value you put out in the world is worth more than the cash you spent to create it. And whether you're, again, for profit or not for profit, it matters just as much, because for profit, it's obvious. You want to make profit, you have an owner. Generally, the owner wants to have dividends or be creating value, or, well, there's my puppy saying hi. I don't know if he's going to get in the picture or not. Yeah, you'll see a little tail wag here and there. But in a for-profit business, it's obvious, right? Somebody, whether it's you because you're the owner, are saying, hey, I need to make money here, or you've got owners and they're looking to see the value of their investment increase, or they're looking to get dividends, or they're looking to see profitability so that they know that 10 years down the road, or 5 years down the road, or in some cases, 1 or 2 years down the road, they will get value when they sell the business. In a for-profit business, it's really obvious. You don't do for-profit businesses without a good financial arm unless you're doing it just for fun. And there are people, believe it or not, I actually worked for one company who was doing it just for fun. And it didn't occur to me when I first started working for him. That was a full-time job. When I first started working for him, it didn't occur to me, but he had a lot of money, some of which was invested in this business that we ran. And while it was important to him to be a good businessman on the surface, appear to be, he would make, consciously and admit it, unprofitable decisions. And he could, because for him that business was built and sustained on play money. He enjoyed playing business and owning a business and walking into a building that he owned, and having employees and being able to be good to them and doing all of those things that when I said ego or hobby, in some cases there is an ego coefficient, and that's more important than the profitability piece of the business. So let's assume that none of us are in that state where we've got money to throw away on a business and just make it a hobby. And if you're listening to this, you are a business. And if you are a business, then you need a finance pillar. Because the only measuring stick, absolutely the only measuring stick to know if you're profitable or adding value or whatever it might be, is going to be to measure the financial performance of the business. So then my argument becomes, why not make it fun? If you have to do it, if it's such an important component of the business, and if the tools are out there and the people are out there to make it fun for you, why not do that? And my goal is to, over enough time, show you all the tips, tricks, lessons, experience, jokes, bad jokes, good jokes, that I've learned over time to help make finance fun for business owners. So that's sort of thing number one. In a not-for-profit business, because the case isn't quite so obvious, most not-for-profits are in business because they want to increase the amount of money they're collecting, and therefore value they're able to create and put out into the world to serve. And regardless of whether the bottom line at the end of each year is going to be zero or not, they still need to keep creating and growing and growing and growing in order to increase their mission to serve. So that's why I say for both profits and not for profits, unless you're in it for hobby or ego, you got to be in it for profit. And if you're in it for profit and value, own the finance stick. Own the finance pillar. I'm holding a selfie stick, so I call it a finance stick. But the next thing then becomes, if I've got to do it anyway, why not make it fun? And I'm here to tell you it can be fun. Because historically, especially for entrepreneurs who have a really big need to get things done quickly and efficiently, accounting and bookkeeping is set up for the tax accountant. So they haven't known or had time, frankly, to ask the questions of their bookkeeper yet to say, hey, can you do this a little bit differently so that I don't get frustrated by the numbers because they're really built for the tax accountant and not me? And so one of the things that I'm highly recommending here in this current series is have that conversation with your bookkeeper, whoever they are. Now, in the cases where, Aunt Chloe is doing the books and she has been for 13 years and she's never truly been a bookkeeper and is doing things by habit, and you have all sorts of family constraints and other issues, this isn't going to work. You're going to have to either just accept that that's going to continue or say, no, I'm not going to tolerate that anymore. I love Aunt Chloe, but there's got to be something else she can do for me and still be valued, but bookkeeping is not the place to put her because she's not a bookkeeper. But if you talk to any bookkeeper who's doing it professionally or accountant who's doing it professionally and say, hey, can we tweak things a little bit so that these numbers could make sense to me? 99% of them, any of them that are worth their salt and know their tools, are going to tell you, oh, sure, yeah. How do you think about your business? And therefore, how can I make it make more sense to you? And then you all of a sudden get a ton of value out of the financials. Because one of the biggest frustrations I hear people have, and one of the things that makes them laugh so much when I say finance can be fun, is for some reason they are pulling out their hair. So I asked a simple question, how much did I spend on stamps last month? And what you get back from a bookkeeper is, well, what kind of stamps do you mean? Which post office were you curious about? When you say spend on stamps, do you mean spend on stamps or commit on stamps? And you just want to scream, you just want to run screaming from the room because you just want to know how much you spent on stamps last year. That's kind of one frustration. The other common frustration I hear is, I never get my books. What do you mean? Ask questions when I see my books. If I get them, they're 30, 60, 90 days late. Why would I even bother to look at numbers that were that old? Well, one of the things I can tell you there and really need to communicate, and I haven't talked about this a lot lately, but you need to be challenging that accounting team of yours. I don't care if they work for you or they're outsourced or it's through your tax accountant. There is no excuse for getting your financials later than the 15th day of the month. Period. End of story. And if anybody wants to challenge that, feel free, drop in. I don't care how big their practice is. If their practice has grown to where they can't make that commitment for a customer, then they're not sourcing it properly and providing the proper overhead to the business. And yeah, I'm not adamant about that. Because what I will tell you is for every client of mine, the books can close no later than the 5th workday. So a business owner is looking at their financial reports for the prior month no later than the 5th workday. Now, there may be some months where they choose not to look at them until later in the month, and that's fine. But they're available because on the 5th workday, you can still react to them. You can still do something about it. You can say, oh my God, my spending in this area is way up and I got nothing back for it in revenue. And you've got 25 days left in the current month to kind of do a course correction and fix that. And that's the thing I really want to drive home about finance. It's such a great tool. It is really, think of it as a camera that's giving you a movie every single day of what's actually happening in your business and telling you how successful it is or isn't. And therefore, by looking at that movie every month, you can pick off the things you need to do to go fix and then watch the next month to see the improvements. And that's when it really gets fun. As with any goal, as with achievement of any goal, as with identifying any sort of, plan, implement, feedback, react, plan, implement, feedback, react loop. This is kind of one of the most satisfying ones because numeric, quantifiable change or differences are so easy to see, and they're not, qualitative, which are sometimes very hard to measure. So just wanted to throw that out there as food for thought. Please join me on the mission to make 10,000 entrepreneurs believe that finance can be fun. Please join me over on my Pam Pryor page, where we're going to keep track of all the things related to the Cash Flow Radio Show, the Your First CFO book, and courses and other opportunities that are coming up for you to join and be able to be part of the 10,000 entrepreneurs who are going to be screaming that finance is fun. I have to come up with a catchier title for that, but we will in time, and I hope you're one of them that joins us. Have a great day. Bye-bye.